All right. Miguel,
Yes, sir.
I'm sorry for being tardy today.
Was it?
But you have shown me a level of patience that I appreciate, man.
I raised children, so patience was ingrained. Yeah.
Yeah.
I'm still being patient with them as adults.
Last week you asked me about chickens.
Yeah. Now, when you go to the grocery store, well, I asked you because you own chickens,
Hmm.
right? And so when you go to the grocery store, you see those rotisserie chickens,
Right.
they're beautiful, they're cooked, and they appear to be about the same size as the raw chickens, right? And they smell extra good. And so if they're the same size and they're already cooked and they're roughly the same price, what's the logical conclusion?
They should be the same value.
Well, would it be easier to purchase something that's already cooked and it's the same size? You know what I'm saying? It's convenient and it's the same cost. That's what it would appear.
Right.
But the reality is, those chickens in the rotisserie thing, they're pumped with who knows what to make them look the same size. They're literally half the size of the raw
Are you saying
chickens.
that there's a conspiracy theory against chickens?
Yeah, no, against grocery stores, but
Oh,
yeah, more appropriately. But here's the point: perception is reality. That's the sad news, and that's true in the economy as well.
yeah.
And that's especially true right now with the banking crisis that we're dealing with. Perception is reality. Whether it's true or not doesn't matter. What people perceive it to be has more weight.
Thank you, sir. That bought me enough time to take care of these settings. So, for those of you who've just plugged in, we are on our first live episode of the Move It podcast, and we are trying something completely new. So, if you are enjoying this comedy show, well, it's not a comedy show because it's going to feel like a bit of a comedy show because we're working through some of the kinks, but we're going to take a few weeks and we're going to just iron through it. I think we've done a pretty good job of getting it ready, and that's part of the reason why we're delayed. So, Mike, Miguel Francis, aka Miguel on my
Yeah.
phone.
Yeah, I like it.
Joining me on this episode of Move It. Thank you and so much for joining us to Move It. Move It. With the Five Diamond Group. My name is Jared Uraine with the Five Diamond Group here at Vice Realty. I'm a broker salesperson. And today is going to be episode. Lex, help me out here. Are we on 4? Oh, this is 4. Yeah, we're on 4.
So many, hard to keep track.
I know. So, and then we got a 3 repeat and a 3-peat. So we're going to call this 3-peat 4.
Okay.
3-peat 4. And so part of the reason why we're going live on this, folks, is because I've got a phenomenal videographer. What's his name, Mike?
Lex.
Lex Guerrero. His company is Lex Get Raw, and it is expensive to use him as a production office. So we figured, hey, let's just go live. Let's just get this out of the way. One and done. We're going to walk away from this, and we are happy with whatever the results are. So join us and enjoy every single mess up that we do here because it's straight up live. Love it.
I'm the sponsor.
No, you're not. Yeah, hey, you want to be this? And so today's sponsor is Lex Get Raw. Mike, what is in my Lex's tagline?
Let's get raw. Preserving the past for the present. Digital media services capturing those emotional family moments.
Bravo, my friend. We just spent the last 45 minutes getting all of this taken care of, and Mike just whipped together his mission statement. So, Lex being our key videographer as well as technician behind the scenes here. Yeah, he is also part of the Five Diamond Media Group, getting our digital media taken care of. So, as far as professional photography, as far as weddings go, and any other services that you need, including real estate photos, property photos, even videos, drone footage. He is absolutely a specialist in every one of those arenas.
And he brought me a cheese Danish.
And knows where to put all your stuff
Yeah.
while we're getting prepared. How are we looking, Lex? It's buffering. That it just might be a local computerized thing, so we'll just continue and carry on.
What's her name? Dulce
Mm-hmm.
asked me if the video finished.
If what?
If the video finished, so
Oh.
she's buffering, so
It could be we're taking up a bunch of bandwidth.
probably it says here that warning: the stream current bitrate is lower than recommended bitrate.
Okay, cool.
What that means, but
Well, we are going to carry on with our. Well, I'll tell you what. I'm going to switch over to the hotspot on this one then. That way I can just see. Again, guys, you're seeing this in real time where we're ironing through the kinks so we can know exactly what we're dealing with in the next couple of rounds. And I hope you enjoy it. All right, we are on hotspot. I'll get on that, and then I'll get off of the local network here, which means I should be able to see the video as we get plugged in. All right, so just to carry on, Lex, we're going to move on to the first segment of today's video, and that's going to be our neighborhood gems. Cue it up, my friend.
it's buffering. Yeah, it's like it's charging. I don't know why. Should we start it over again?
I am seeing it live.
And it's like just
I am seeing it live, but it could be stopped. So, since we are recording, let's just go ahead and carry on and see how this carries off. I don't know if that made any sense what I said, but
is it working? You can come in.
yep. So I see it running on this side. It might be their network, which is why she's not seeing it, which would affect everybody else's. Yeah, very good. Thank you for that, and we will carry on. All right, Lex, let's move on. Neighborhood gems, my friend. From the dealers to the casino pit bosses, the house cleaning crew to the mob, even the world's best entertainers and legendary showgirls all follow the ultra rich and the California escapees to call Las Vegas home. Join us in this next segment as we explore the city's history and identify communities as well as local services that have made Las Vegas such a unique place to live. These are the neighborhood gems. So, to start us off today, we're going to start a three-part segment in Las Vegas history with some pretty basic information that, if you've lived here, you might not even understand what some of that history is about. But we know that Las Vegas is a Spanish word. Miguel, do you happen to know what that stands
The
for?
meadows. Before the dam, there used to be a little bit of water out here.
That is correct, my friend.
Yeah.
There was an aquifer that was balanced in pressure to deliver enough water for the local residents, which included Indians, Native Americans, Spanish traders. And in the 1700s, they were making their way to L.A. I should say the Spanish traders were making their way to into L.A. And they discovered this desert oasis called the Meadows. And then, of course, when you translate that, it comes across as Las Vegas, roughly, so to speak. And they had, at that time, it was lush green grasses, nutrient-rich desert soil, gave a nice water supply to the local community. And the development of the city was really based off of that particular aquifer. Now, at the time, the estimated flow, they estimated the acre feet per year to be around 7,500. That was just based off of the water pressure that was collected and then being forced out into this meadow. And then, of course, what happens when you start consuming all that water?
Turns into a desert.
Yeah, man. I mean, you fast forward the growth of the city and the consumption of the water out 50 years, and in 1962, 1963 they were reaching 40,000 acre feet per year,
Mm.
which is just what 5-7 times more than what should have been used. And of course, by 63, that aquifer ended up being dried out. Hoover Dam created Lake Mead, and of course, they started pumping in a lot of the city water and moved 90% all the water that has been fed to the city comes from Lake Mead. Now, in percentage of how much water is being pulled from Lake Mead, do you have any idea how much Las Vegas actually consumes from the annual production of Lake Mead water?
More than their apportioned amount. I know that for sure.
More than their apportioned amount?
Yes.
Less than 10%. 90% of all the water that gets pulled from Lake Mead doesn't even go to Las Vegas, which is fascinating because most people are saying, why would you move to Las Vegas? There's no water. Well, the fact is 90% of that water is actually going to other surrounding states like Arizona and California, not for city consumption, not for general use, but for farming. So it's just out there to get sprayed out into the world to build the agricultural and support the agricultural segment of that. The nice thing, and the reason why the Las Vegas history and the water subject is a big deal, is because we just spent the last, 4.5 months enduring an atmospheric cycle. And that has brought so much water to the West Coast, which has really been a great thing for us because as of March of last year, Lex, if you pull up the graphic there, it's got March 2022. Yeah, sorry about that. Yeah, you're go to plus images on that one. Yeah, yep, and then image, and you're gonna go existing, and it should be number 5. No, I'm sorry, 7. Yep. Anyways, there's a couple of graphics that I've got pulled up, and we're ironing through those. But the water consumption as of last year, here in Las Vegas, we were at a level D4. That's the extreme severe drought level, and much of California was one step below us for the drought issue. If you can't get it, it's no worries, man. We'll skip it this time. Work on it next time. And over the past 4 months, in fact, as of January of this year, we started seeing a lot more of the aquifers and water tables starting to get filled up. And according to the Droughts Authority, we have now moved up 2 clicks. We are now at level D2, which is severe drought, which is great progress for us. The great news about California is that they have actually just removed their whole drought issue. So they don't even have that anymore based off of all the rain and snow that they've got set up on there. Great news for them. And, encouraging news for us, considering that just a year ago we were in a D4 stage. Last few years have just been a huge conversation piece for water. And with that, it really brings up the subject of what do we do from here? Because are we just going to continue in the same path? Well, quite honestly, Southern Nevada Water Authority has been the leading expert in water conservation. And so most of the surrounding states need to implement these measures. Even though you've got plenty of water now, if we're going to be able to endure any sort of continued issues like this, there's got to be change that happens socially. And it's not just Southern Nevada. They should take note of what we've done in as far as making efforts to conserve water, change the farming tactics to be more effective in there, and that's just something to really think about.
Well, that's not even the southwestern United States. That's a global issue, actually. Yeah.
What are you, global change artist?
Well, there's a global water shortage. That's an economic topic. But
It is.
Yeah.
In fact, Gabby and I were in Antarctica in December, and there was an extraordinary amount of snow that were preventing the penguins from being able to reproduce. And I thought, hey, Antarctica, South Pole, extreme Arctic temperatures, shouldn't that be good news for them? Especially with the whole glacial melting and all that good stuff. And the answer from the scientists was actually no, because Antarctica is it's actually the driest territory on Earth. It's supposed to be just all of this ice that was previously there. So getting more of that, it actually hurts the ecosystem there. and a lot of the additional snow is creating additional ice glacials to drop and so forth. So absolutely, there is an impact that's happening. And if you're hearing about the scientists talk about glacial snow ice melting and so forth, it is a serious topic, man. If you want pictures of that, got plenty of those, man. Plenty of video. Mike,
Yes, sir.
1907.
That was.
That's a year we're going to get to.
What's your favorite basketball team?
Well, since yeah, well, come on, man. I'm from Southern Cali, so Lakers.
Okay.
Yeah.
Well, the New York Knicks have something to do with 1907.
Yes, yes. In fact, 1907 is going to be another year that we talk about a little bit further here. But in 1907, here in Las Vegas, we had the first telephone installed, one of 50 that were installed here in the city. So in today's episode, 1907 will make another appearance as we move on. That covers it for the Neighborhood Gems today. I want to thank you for tuning in to Move It with the 5 Diamond Group. My name is Jared Uraine, and this portion of the episode was sponsored by 5 Diamond Group Real Estate. When it comes to buying or selling, making sure that you are making the move that is right for your family is absolutely our highest priority. And what that means to you is you need to get an expert analysis on your situation, as well as guidance in the right direction as to how to make that move best for you. In today's ever-changing market, especially with higher rates and uncertainty, this move makes it even more important for you to get the right information the first time. Reach out to us for a direct consultation, or you can find more information at 5diamondgroup.vegas. That's 5diamondgroup.vegas. And you can also reach out to any of our social outlets that are running across the stream.
Very good.
We are going into the market update there, Lex. This portion of the episode obviously is sponsored by the 5 Diamond Group at Vice Realty. My name is Jared Uraine, and we're going to go through quickly the national and local statistics and talk a little bit about the economy and kind of what's happening in the last couple of weeks in news. All of our information is taken from public data sources as well as open source news outlets. So any sort of content or feedback you've got there, drop it. We'd love to see your thoughts on these. Mike, our median home price here in Las Vegas currently is still $424,900, which is $100 short of $425,000, which we have seen here in the last 3 months. Nationally, $363,000 is going to be the median price point for a single-family home across the country. How much of the population can afford a home today?
In the United States, sadly, only 21% of the population can afford a medium price home. If you think about it, the mortgages that you do for your business always have, how many can you count? Perhaps only on one hand, how many mortgages you do with a single income. They're all double income. A single income person cannot afford a home in this country anymore. Only 21% can.
Mm-hmm. Yep. We're definitely seeing a lot more dual income, as well as mom and dad or other family members jumping in to help get qualified and improve a buyer's situation. In fact, all of the changes that have happened do have an impact on purchase ability. We'll talk about more in the mortgage segment. But as far as the bank failures, I know you are loving. I'm not loving. I know that you've just been
there's just
tied
a lot
up
of
in so much going
there's
on.
a lot of stuff going on.
Yeah.
But I want to jump back just for a second, if I could.
Sure.
Even though the housing prices nationally might be dipping a little bit, that doesn't mean that the mortgage rates are dipping, because the pace of interest rates offset any softening in the housing market.
Price-wise.
Yeah, exactly. Yeah. But anyway, right, the banking crisis. When you think of March Madness, what do you think of, Jared?
The finals, yes.
Supposed to be thinking of basketball.
Yeah.
Not this year. This year, everybody's thinking about the banks. They want to know,
Who's going to last the longest?
yeah, they want to know if I'm banking at the right place. Well, that's okay. But what about my employer? Is my employer banking at the right place? Because that could be a concern because your employer no doubt has more than $250,000 on deposit. So March 3rd of this year, a bank by the name of Silvergate, which cracks me up. Whoever came up with that name can't be too old.
Couldn't be. Is most likely born after 1975, right?
Right, because I think of Watergate. But anyway, so Silvergate voluntarily closed their doors. They were not FDIC insured, and they were heavily weighted in cryptocurrency. And so a lot of people discounted that. They thought, well, that's a crypto bank, so it's okay.
Right.
But then just 7 days later, on the 10th, Silicon Valley Bank went into receivership. There was a run on the bank. And Jared, do you know the speed of light?
Oh man, of course not.
Okay.
That's what Alexa's for. Tell me.
Yeah. The speed of light. What's the speed of light, Lex?
175 something.
175
million miles an hour.
Okay. Well, what's faster than the speed of light?
Ooh.
What is faster than the speed of light?
Oh boy, is this a joke?
No. A run on a bank.
Ah.
And here's why. Previously, in order to withdraw deposits from your bank, and this even applied in 2008, and to go to another bank and open an account, that took half a day's worth of process. You had to leave your office, you had to leave your home and go do it.
That's right.
But if you get a message through Twitter or through Facebook from your friends or a group of friends saying that there's an issue where you bank, you don't even have to leave your office. You don't have to leave your home. You pull up your mobile app and pull your money out and open an account somewhere else. And boom, there's a run on the bank, and it can happen extremely fast. Now, with SVB, Silicon Valley Bank, there was a $43 billion run on Friday. And then just a few days later, on Sunday, the same day that there was a $43 billion run on SVP, there was a $10 billion run on Signature Bank in New York.
Right.
So by Sunday, Signature Bank went into receivership, both with the state and the feds.
Right.
And so they tried to calm the market down. They tried to contain it. They tried to make sure that it didn't spread to other banking sectors. And a week later, as a matter of fact, a week later on Sunday, Credit Suisse was forced into a shotgun marriage with USB, the second largest bank in Switzerland. And all of a sudden, we had a banking crisis going.
Not nationally, internationally at this point.
Correct. And Credit Suisse had the ability to have a macro effect on the entire global market because they have their fingers all over. When Credit Suisse struggled, that affected Deutsche Bank, which is now struggling in Germany. That affected banks in Italy, France, and Great Britain. So that was a big event.
What's a run on a bank for our listeners?
Well, a run on a bank is basically, we're back to the perception, how that barbecued, chicken looks like a better transaction than buying a raw chicken.
Right.
Well, sometimes the perception of the consumers thinking that their deposits are at risk when they may not necessarily be. Doesn't matter. If that's what they perceive, then they're going to withdraw their funds.
Yeah.
And the problem we have today that they didn't have even as recently as 2008 is they can do it with their cell phone.
Yeah. So you got the venture capitalists that have all their deposits in SVP, with technology giving them the information in real time, with the ability to be able to move massive amounts of money in real time. That acceleration of technology, being able to communicate and deliver to people, is what stimulated, basically caused the run on the bank, basically, and a run being people moving their money,
right,
and taking it out of the bank, which then makes it even worse because they could have done well if nobody moved the money. They would have been able to get the $2 billion and get their operating expenses. Who knows for how long? But at least that's what caused it, right?
Well, what happened was that particular segment, the technology sector, they were struggling as the technology sector is
Right.
struggling now. So there were more withdrawals than SVP planned on. So they had to sell their underlying assets in order to provide liquidity for the withdrawals. And they were selling those underlying assets at a discount of 1.8 billion, which is a lot of money, but it's not an impossible amount of money for a bank that's worth over $100 billion, right? And so the news got out, though, to the clientele that they sold those assets at a loss of 1.8 billion. Thus, the perception kicked in, and there was a run on the bank.
Broken down eloquently and professionally, man. Thanks. Well, we hear rumors about what other banks. We know that this is just the beginning, and we also want to put it in perspective, right? So this is not fear mongering; these are just facts. The failures that have happened and that we anticipate are basically isolated into which types of banks.
Well, it's mostly regional banks. I'll tell you, if you're in a smaller bank or a credit union, you're protected to a degree. And I'll tell you, it's kind of funny why, because those banks do not have effective mobile apps.
Back to the technology thing. Yes.
Yeah, and so if there's going to be a run on your bank, on your local credit union, you have to stand in line outside. Most people think, it's not worth that much trouble. So there is no run on the bank.
So the value of being old school
Yeah,
is going to protect you in this one.
having to go in and sign the paperwork, it prevents it, right?
Right.
So it's the mid-cap banks. Now, the mid-cap banks, the reason they are struggling is because they gave more liberal more liberal mortgages to commercial markets and to the real estate markets, a little bit more liberal than the large cap banks. And the other problem they had is that they didn't properly manage their assets that are supposed to back their liquidity. They didn't hedge properly. And so they had unrealized losses, and it didn't matter until it mattered.
Right.
You know?
Right.
And this all happened because the Fed raised the rate
Pretty
9
quick.
times
Yeah.
in the last
Very aggressively in a short period of time.
Right.
And so you touched on 2 points there that affect us here locally in the real estate market. Right? When we're doing a consultation with somebody, we're talking about who are you qualified with, right? One of our phrases, our keywords, hashtags, who you work with matters. And the reason for that is because, you want to be with an expert. You want to be someone who you trust. And at the same time, you want to be able to get the best that you can get based on your situation, right? So if someone comes in with a pre-qualification letter from Wells Fargo, Bank of America, one of the 4 big banks, fantastic. That tells me that they kind of reached a threshold that those banks consider them to be very well qualified, typically cherry-picked in a normal market. And so with that, the other options that they would explore are other like credit unions. They might have better incentives to be able to get somebody into a mortgage to qualify them. They would be able to consider somebody who had maybe not so perfect credit and go in there, and that's great. Those programs were available. And so when we say, okay, well, you need to work with a mortgage broker because they could probably find even more options based on your qualification. Those conversations will change now because some of these banks will have to tighten up their lending standards.
Well, so far, 44.8% of the banks have tightened their lending standards.
Yep.
However, if I may, when qualifying for a loan, you want to make sure your lender is getting you a DU or LP approved qualification.
Direct underwriting.
It means it needs to be approved. You need to have a qualification that's approved by Fannie Mae or Freddie Mac conditions. That way it can be resold on the secondary market.
That's right.
If you're simply taking the opinion of your loan officer, a lot of people have opinions. So,
And a pre-approval letter is just someone who just reviews your paperwork, does not technically get that underwriting approval ahead of time, and that is absolutely correct. Part of getting qualified versus approved in that process. Yeah. Who are the 4 largest banks too big to fail, Mike?
well, in order, J.P. Morgan, run by Jamie Dimon, Citigroup, formerly run by Jamie Dimon. I'm sure they regret getting rid of him. Bank of America and Wells Fargo. Those are the winners right now because the money is mostly coming out of the regional banks, the mid-cap banks, and it's going to those four banks. Those are the winners. And so if your employer is banking one of those with one of those four banks, this conversation doesn't matter to you, you know. But if your employer is banking at a bank like First Republic Bank, which is down about 87% from March 1st, that could be a concern.
Zion's National Bank has been making the rounds in conversation with their price drop.
Hmm.
I don't know that we will hear anything from them, but they certainly they had an impact from the fallout from SVB and Credit Suisse.
Zion's specific concern is that they have, similar to Silicon Valley Bank, too specific a market segment there in their region. They have too specific a market segment, and that particular group of clientele that they service communicate a lot together the same way they did at SVB, and that's what puts risks with Zion's Bank.
So this whole run on a bank and kind of the uncertainty in the marketplace that people are experiencing, it's not a first time rodeo here.
No, obviously this happened in 2008, 15 years ago. It started, the first noticeable event was Bear Stearns, and then it sort of capsulated in September with Lehman Brothers, and then it went global. But this has happened multiple times in the past, bringing us back to the New York Knicks.
1907.
Yeah. The Knicks get their name from the Knickerbockers, and the Knickerbocker was a trust in New York in 1907, and there was a financial crisis in 1907. They called it the banking crisis, I believe it was.
The Panic of 1907.
There you go, the Panic of 1907. And what happened was there was a group that was trying to corner the copper market and failed, and the Knickerbocker Trust went down. They were the third largest trust in New York, and it just sort of dominoed from there.
And J.P. Morgan and his...
J.P. Morgan, he's an actual guy. J.P. Morgan saved the Treasury in, was it 1893, I believe? But in 1907, they had that same dilemma. So J.P. Morgan had a beautiful mansion right there just outside of Manhattan. And what he did was he called all the nation's most powerful bankers and leaders to his mansion, got them all in the library, locked the library, went into the kitchen, had drinks with his house servant, and played cards until they came up with a solution. And they saved the country's financial crisis at that time.
They blackmailed everybody.
Basically, yeah. There were no facilities in the library.
Oh,
Right?
yeah. Gotta go to the bathroom.
Yeah, and so they had to come up with a solution, and they did. They all put in their own personal funds, and they rescued the banking system at that time. Well, the federal government thought, J.P. Morgan's not going to live forever. They came up with a solution, and that's how the Federal Reserve was formed.
Fascinating bit of history
Yeah.
on the economy. Brought to you by Miguel Francis. You put me to shame, my man. I've got a whole 15 pages of notes here that I'm flipping through, and you're just working it off your memory. I love it. Yeah. And for those new tuned in, Miguel has been one of my friends for many years. He spent many years in the banking sector, right? I'm trying to remember.
Well, yeah, I worked I was in wealth management at J.P. Morgan, and then I previously owned, I was the CEO and founder of E-Trade here in Las Vegas, and then previously the CEO and founder of North Star Insurance and Investments. So,
Yeah.
Yeah.
You're also blind.
and
Which
well,
puts
there's
me to
that.
shame.
Yeah. I wasn't blind when I did all that stuff, but yeah, I've been blind for the last 14 and a half years, yeah.
Yeah, and that's why your brain is on a different level. I aspire to one day, man. Well, with all of this activity happening, we're seeing currency swaps happen internationally. We're seeing international real estate markets seeing a shift, which is great because it kind of contributes to all of the reduction in inflation that we need locally, right? But there's still a long-term effect that we're going here. It's not going to happen next month. It's not going to happen in the next 6 months. What's your scope as far as how long this is going to last?
Okay, the market has priced in that they believe that the banking crisis has achieved what the Fed had planned to do, despite the fact that Jerome Powell says otherwise. The market believes that not only is the Fed going to freeze and hold steady at 5%, but that they're going to start seeing reductions at the end of the year. And their reasoning is that we'll move into a recession uh, third or fourth quarter of the year. And then the historical thing is that the Federal Reserve, in order to help us recover from a recession, would reduce interest rates.
Hmm.
That's crazy talk. That's not going to
You're
happen.
making a prediction. Here we go. Let's hear
No,
it.
well, it's not just a prediction. BlackRock and Bank of America happen to agree. There's no way the Fed is going to stop with the interest hikes. Now, this will be the prediction. They're going to bump it up 25 bips in the next couple of meetings, 25 basis points, and they'll bring it to 5.5. And then based on core inflation, if the core inflation does not decelerate at an acceptable speed, they may or may not continue to increase the rate.
Mhm.
There's thought out there that they could increase the rate to as much as 6%,
Mhm.
which is huge.
Right.
But if they hold at 5.5, they're going to hold there until the interest rates start to decelerate at an acceptable rate. We don't see the Fed moving its rate down until halfway through 2024.
Mhm.
The median Fed rate in 2024 is expected to be about 4.1, and hopefully it'll be 3.2 by 2025. This is going to be a problem. The Fed's hoping to get the uh, inflation rate down to 2% or 2.5% in 2025. So we're in this for a few years.
Yeah. Back to the Great Recession, it took them at least 3 years to be able to kind of get some stability, be able to get the ground running
Yeah.
for the economy for the 10-year run that we just had. Well, as far as the effect and the timing, 5.5 is what we expect, and at that point, they may or may not they'll make a decision. We all thought the possibility of the Fed not raising anything this last round was there, but I appreciate the fact that they did. And hear me out on this one. When we've needed to make changes in our business and we see something lingering that maybe needed to make, we knew that there was an adjustment or a change coming, and it needed to happen sooner or later. Our philosophy has always been, if we need to break the leg, let's break it clean and fast. Let's get it done and move on. And I mean, it's worked well for us, because if you see the road signs ahead, let's get the hard stuff out of the way, because then we can see how the effect, the impact, and how it's going to help. And so in that sense, the higher the rate, great, let's get it out of the way so we can move on to the next chapter.
Well, Jay Powell's trying to do two things all at once. He's trying to save the banking industry, and he's trying to control inflation. The bigger picture for Jerome Powell is inflation. That's the larger picture. And while he only raised it by a quarter point because it was anticipated he was going to raise it by a half, the banking crisis allowed him to only raise it by a quarter point. But he'll raise it by a quarter point twice more, and then, provided there's no more disruptions, unexpected events, the unknown unknown,
The unknown's unknown.
he'll hold it there, possibly, and as long as the core inflation rate continues to decrease at an acceptable rate.
Yeah. Let's wrap it all up together, man. Let's bring this home to the layman, to the local person who's not paying attention to this stuff. I enjoy having these conversations with you, but what does this all mean? How does this impact someone who is thinking about buying today, who's thinking about selling and maybe having to make the move, and maybe possibly giving up the great mortgage that they have on their mortgage today?
Well, mortgage rates are down a little bit because they're loosely tied to the treasuries, and that all has to do with what's happening in the market right now. But not the real estate market, but the financial market. So if you qualify for a mortgage, right now it shouldn't be too difficult to get 6.25, 6.38, 6.375, somewhere in that neighborhood. And those numbers aren't going to be around long, because come May, the Fed's going to raise their rate by another quarter point. you need to put your incomes together, as we were talking earlier, and make that change, because later on that Fed rate's going to be higher, and we're looking at another 50 basis points in total. That's going to push the mortgage rates back up to 7. You don't want to wait that long.
So the change in core inflation as well, it's all based off of how much it takes to afford in living in a property, right? So while home prices were lower, we also had lower rates. So someone's mortgage payment was significantly lower than, let's say, a lower priced home today, but at a higher rate. We ran through the example of a 380 price point last year, and I think that was at 4% we did.
No, yeah, we did it. 4.125.
Right. And then at 363, 5% lower, but now at a 6.5, I think it was that we did.
Yes.
Yeah. That's almost a $500 difference in mortgage payment.
Yeah, an increase. Just because the mortgage rates went up, even though the house might be less expensive, that less expensive home has a higher payment.
Higher payment just because of the rate. Now, the impact that it creates for buyers today and people who are purchasing today, the takeaway points here is you want to do everything you can to get your credit score as high as possible. Higher and better credit mean you get better rates. Of course, obviously, that's going to be a direct impact in your monthly payment. But that also translates into the mortgage insurance payment. If you've got a lower credit score, less reliability, you're going to get hit with a higher insurance fee, mortgage insurance fee, along with that. So, yeah, you might have a $500 difference, but you might also get another $500 price tag on top of that every month because the mortgage insurance saying, hey, you got a 680 FICO score? Yeah, well, here's the insurance fee that gets tied to that. So get your credit to the best level that you've ever had before. Don't take on any new debt until you have your overall credit availability under 30%. Do everything you can to get those things tied and paid down so that you can show that credit score getting bumped up. And if you need references or assistance in being able to make those changes as well as help on your credit, there's absolutely resources out there. In fact, talk to a mortgage lender. They'll help you identify the things that you can help target to help get qualified better. Obviously, pay off your debts. And then if you're going to get qualified to purchase a home, well, make sure you reach out to family, friends, as well as other resources that might not only help you get qualified for a higher payment, maybe a higher FICO score, but also get contributions or monies that would be able to help cover the initial costs on it. So mortgage costs are going to continue to go up as an effect of all of this, and they're going to be a little tighter on their lending restrictions.
They're definitely going to be tighter. And you mentioned to get, other monies, that because of the tighter credit, that money's going to have to be seasoned, meaning it'll have to be in your account for an extended period of time, depending on the lender.
Yeah, absolutely. And again, who you work with matters, right? So the four banks, they've got the advantage of being able to attract all of the money. They're not going to have any issues. They're going to continue to be very selective in who they select as far as approving and their qualifications. And any of the survivors in the mid-cap range, they will probably create more incentives. So we might see other programs out there coming along, but you need to make sure you get the right information.
I'd like to comment on those four banks, though.
Yeah, bring it.
Those four banks, they're going to have possibly tighter credit than Fannie and Freddie because they're looking at keeping the loans. They're not necessarily going to resell them. They'll create certified mortgage obligations and keep them for themselves. If you get a mortgage broker, he or she is only going to look at Fannie Mae or Freddie Mac requirements and not exceed that. It's possible, depending on your circumstances, that you would be better served if you used a mortgage broker who would qualify you with LP or DU, Fannie Mae or Freddie Mac qualifications.
I'm glad we got this recorded because that was the most eloquent way I've heard that said. Man, awesome. Well, Lex, this takes us on to our next segment, Lessons or Inspiration from the Field. The only thing consistent is what, Mike?
The only thing that we can consistently rely on is inconsistency. Yeah,
We do our best to prepare for the worst and hope for the best. But
absolutely.
part of the reason why all of this information that we want to break down for you is to just put it in simple terms. Forget the hype that the media is out there. Let's just look at the facts. Let's just get to the bare bones of it. But we do know that as great as the last run was from the real estate market as well as the stock market, things change. Things change, and that's the one thing we can count on. And so while things change, there's nothing to really be afraid of. We know that leading into the Great Recession of 2008, there was the highest number of real estate investors, as well as realtors and real estate agents across the country who thought they were making a big buck because they can see things moving up. Yeah, it makes sense. Anybody can do that. But when the market changed, how many of those continued or survived? Well, Great Recession was a pretty big deal. COVID, that was another one, but that was a real quick one. And what we're seeing here is another market shift. Ready, and we've needed it. It's been a long time coming.
That's true. However, the local real estate market might correct a mild amount, but don't look for any significant movement. It's not going to be anything like 2008.
We are
We're
not crashing.
No, it's not the same structural situation.
That's
It's
correct.
nothing close. There may be a slowdown of activity. That's not my expertise, so I don't know. But I know that the inventory is still pretty tough. What is the inventory these days?
Current inventory here locally, Las Vegas, we went from 4 months of inventory in December to 2.7 months. And we are on pace at the moment to level off at the high and mid twos for inventory. Medium price point staying where it's at because in January we had the lowest number of transactions I think ever in Las Vegas history.
Oh, wow.
Which at least of what's been recorded, which means at the bottom of the cycle of our year, we are posed to see a lot more activity. Period, and we have actually seen that happen in the last couple of months.
So you said
Extraordinary.
we had the lowest amount of transactions in February?
1,860 something closings.
Okay. So it did slow down?
It has slowed down. So if we were to look at a
Okay.
chart
That-
from March of last year down to let's say October, we see a direct impact of the Fed rate, people backing off, and transactions slowing down, inventory going up, median price point going down, all of the indicators as expected. In October, we started seeing a pullback of the number of new supply coming in. So that contributed to our inventory going from 4 months in December down to 2.7 months here.
So that's an advantage for buyers because that way they can have contingencies that when the market was red hot weren't even allowed.
That's right.
One of the contingencies that's out there for buyers right now, both buyers and sellers, has to do with their employment. If you're in the technology sector and you're buying a home, oftentimes those people say, this is contingent on me having a job through close of escrow. Yeah.
Interesting. Yeah. Well, my friend, thank you so much for joining me.
You bet.
Thank you if you've been hanging with us through this episode. This is the first live episode that we've done on the Five Diamond Group podcast of Move It. And next one is going to be that much funner. I know you're currently looking at Mike because I think we're having technical issues, but no worries.
Good grief, that's
Mike,
scary.
Mike's view is just beautiful. I love it. While Lex is having fun dilly-dallying with our goodies, I want to just take a moment and say thank you so much for tuning in. If you'd like more information on any of these subjects, you can click on the links below for any of the reference material that we have. If you're looking to buy or sell, well, of course, you know how to reach us here at the Five Diamond Group. You can contact us directly through any of the media social outlets or through our website, fivediamondgroup.vegas. My name is Jared with the Uraine Ordonez Five Diamond Group here at Vice Realty, and this is Move It. Thanks for joining. We'll catch you next time.
Good?
Nope. Closing.